Richard Cormier with Cormier Insurance Group here in Sebring, Florida. Today, just want to make a really short, quick video about automobile claims, specifically a total loss scenario. If you've never been through one, I hope you never have to go through it. I personally have been through one, and a few of my clients have as well. If you have, you know it's painstaking, it's aggravating, but there is light at the end of the tunnel. Now, we first have to look at the way that the carrier determines the value of your vehicle. What they do is they go on an actual cash value basis. So pretty much what that means is, what could you have sold your car for a reasonable price 5 seconds prior to the accident? And they take in the age, mileage, condition, wear and tear, things like that when they come up with this actual cash value. Now, I was involved in a total accident. It was my fault. I had a 2001 Acura 3.2 TL, and when I totaled it, the carrier lowballed me. It was not my opinion. I did the research and I found comparables, which were 2001 Acura 3.2 TLs. So I was able to present this to them, and we came to a favorable agreement to basically put me back to where I was prior to the accident, because that's what insurance is for. Not gain, not loss, but to get you right back to where you are prior to the loss. So what we have to understand is it covers the vehicle, not the loan value. So in Highlands County, we have a 7.5% sales tax. So if we buy a truck for $20,000, sales tax $1,500, fees and everything else that they would build in there, we'll just make even at $500. So our loan value is $22,000. So if we drive this vehicle for a year, just say we've paid off $2,000 of it, we still owe $20,000 on this truck that we purchased for $20,000 was the sales price. If you total it, they're not going to cover the loan balance unless you have the gap insurance or the loan lease payoff. What they're going to do is your actual cash value, unless of course you have that endorsement. So if you feel like you've been lowballed, do your comparisons. You can look on Auto Trader, find a local dealership, but it has to be a legitimate comparable vehicle. We cannot present, if you had a 2015 F-150 Lariat, you cannot present to them a 2016 or even a 2015 F-150 King Ranch. The values are going to be completely different, and they're not going to honor it. They don't have to. They shouldn't, because they're not the same vehicle. So when you are getting your comparables, know that it has to be, as close as possible to that same exact vehicle. You can get the same model and everything else. You want to try to match those miles up as close as possible. That way you get the most out of your settlement claim check with them. We've run into issues where people, their loan exceeds the value of the vehicle because vehicle values depreciate rapidly. So keep that in mind if you do have a total loss. If you do have a loan on a vehicle, I recommend having that loan lease payoff. It's not gap insurance through the finance company, it's through the insurance company. Most of them offer it. I highly recommend it. It comes in handy. Nobody ever plans for a total loss, but it's a cheap coverage that you can pay for to help you out in that situation. If you have any questions, if you have anything else that you'd like me to talk about, please leave a message, leave a comment, and we'll make sure to get that on video. And you have a wonderful rest of the week, a great rest of April. We look forward to May.